got to the point where, and this was indicative for me at least, how lucrative the consulting business is. Actively tried to fire us as a client on the audit side.
It's like a weird insurance policy, right? I mean, that's essentially what you're saying. Like,
I saw numbers of somewhere between 70 to 90% of the business transformations that they're involved with clients fail.
what does everybody really know? Nobody knows what's going to happen in business the next day, the next week, the next year.
You're listening to Burn Rate and Bullshit,
The show where founder suits and corporate clowns all get called the fuck out.
We're Josh Robinson and Mike Nathan, entrepreneurs turned VCs.
With zero filters, strong opinions, and a bullshit detector set to high.
Welcome to the only business podcast that actually tells it like it is.
I'm a desperate man. Send lawyers, guns, and money. This shit has hit the fan.
So Josh, when you're starting a company, you're a founder, existing or new co, super high growth, you always want to make sure you've got some of the smartest people in a room. And boy, does it seem really smart to bring in the big four, and we're talking about people like McKinsey, Bain Capital, KPMG. Who's the fourth? Am I forgetting? The other people, the big four, Accenture, right? That's the other one.
Well, I think usually big four is like Deloitte, EY, PwC, KPMG.
So none of the people I mentioned. So let's say you call any of those people.
But to your point, there are, separate from the quote big four, there are some really big notable consulting only firms, which McKinsey, Bain are the big ones.
So it always feels good as a CEO or even your board will be probably quick to help you along. Like, hey, get some smart people in the room, smarter than you idiots, and help sort this out. And I think in the past that felt like a safe play. Like, let's not get outmaneuvered by somebody. Let's make sure we know it. I know you've had tons of experience, but that's a smart play, right?
It can be. I would argue, though, even though the narrative is, hey, let's go grab the smartest people we can, you're not, in buying someone from the big four, you are not paying for expertise. You're just not. You're paying for someone to be in the room next to you when the decision goes wrong. And there's someone else to blame. And that's what the billable hour is for. I mean, that's the whole product, is you have someone there to point the finger to and say, well, hey, board, you all agreed that we should bring in Deloitte. Deloitte told us to do ABC, and it didn't work. So it's Deloitte's fault. It's not my fault. It's not your fault. So in my opinion, it is a smart move. Sometimes you're getting expertise, but rarely you're getting the cover.
Yeah, that's interesting, because that's also my view of it. It is not, you're not looking for them for, I guess there's a minimum level of sort of a couple other smart people are thinking about it with me. And I don't know how valuable that is. The value is, and it seems like antithetical, like they're going to help me find this secret way that we couldn't find, and they've got a special way to do it. It's like a weird insurance policy, right? I mean, that's essentially what you're saying. Like, it's not, I already know the industry, dummy. That's why I'm in this seat that I am. I know, board or senior executives, I know the space. You're not going to come up with like, ooh, do new Coke instead of classic Coke. Great idea. Like, anybody would have told you that was really silly. So I think where I'm going with this is, or where I think we're saying is, bring them in on a controversial play, or understand you're paying for the CEO's insurance policy. You don't fire him, you just stop the billable hours with the consulting firm. It's a pretty skeptical view, but are we not right on the mark with that?
I would say, maybe not publicly, maybe not in their annual letter to the partners, but I would expect most consulting firms would agree with this.
Yeah.
That's part of the value, if not the entire value proposition that they bring to their clients, is it's cover, it's safety, it's an insurance policy.
So you've hired consultants like this before at previous jobs. What are they telling you? How are they selling you on this? Because they're not really selling strategy, or they're trying to, but that's not what you're buying them for. Again, I don't want to repeat myself, but what do they tell you that makes sense? Like, yep, let's bring them in. Like, what's the thing that they're, clearly they probably don't deliver it, but What are they telling you?
Well,
that makes sense.
I would. So here's I'll give some credit to consultants,
Mark the
in
tape.
that they are some of the world's best salespeople, especially at that managing director partner level. Their
Sure.
entire job is business development, and once they get their foot in the door with you on one engagement, they're immediately trying to identify how they can sell the next one. And the art in it is you got to tell your client that they're a fucking moron, but do it nicely enough that they want to hire you, right? Like,
Right.
hey, you idiots are too stupid
Yeah.
to figure this out on your own.
Hey,
you
you mouth-
have to bring me in because I've got the expertise.
All you mouth breathers over there in the on
right.
the 10th floor, you're gonna need my help.
So I have always been impressed by really great partners in consulting because they are fantastic salespeople. They
Yeah.
truly are. And I don't typically hold salespeople in a real high regard, as you know.
Familiar?
Yeah.
Very familiar.
And
Sort of a
that's
disdain,
that's
really.
the entire engine there. So I mean, they do a fantastic job. My experience with a lot of consultants has been around the business transformation space. So either the entire wholesale company, and you're going in a different direction with the product, or what I saw a lot of is we were in acquisition mode at a company that I was at for over a decade. And as we were integrating all the different organizations that we acquired, there were different corporate service lines that needed to come from the 12 acquisitions and really be deployed at the enterprise level.
Yep.
And so we brought them in for HR, HR transformation,
Yep.
IT transformation, finance there was always this joke of what was going to be transformed next. And we would bring it, our case, it was Deloitte. We were bringing in Deloitte Consulting to help define what the future state should look like based off of best practices in our industry for organizations our size, build out very metric-driven benchmarks, and put a roadmap together on how you get from where you're at to,
Sounds amazing.
to what that
Josh.
is.
What's the complaint?
Well, on the same basis of we're too stupid to figure out what the roadmap is, we're probably ineffective at actually executing on that plan. And some consultants will go that next step and actually execute for you. They'll
For a fee.
for a fee, small fee.
It's very minimum.
And I mean, those private jets and the private schools aren't going to pay for themselves.
They
Mike.
won't. They won't.
So, because I saw a statistic that the average partner makes about $1 million a year, which is good money.
No, it's great money.
Not outrageous, but it's real great money.
Well, to the average cat, that is insane. That's a big
It's
number.
20 times the average income of a
Ish.
U.S. citizen,
Ish.
right? So it's impressive. So for a small fee, they'll actually execute for you, but a lot of times they won't do it. In the case of this particular company I was referencing, we also use Deloitte for our financial audit.
Wow, sure.
So for regulatory reasons, for conflict reasons, they were only allowed to do so much on the consulting side for us in terms of total dollar spent,
run the
in
audit
terms
thing.
of the work that they were actually, right, 'cause they couldn't get under the covers on stuff because that would conflict with them doing the operational
The person
financial
doing
audit.
the thing is also checking to make sure that the thing is
Correct.
legitimate.
Yeah. So they could only go so far on the consulting side with us. Got to the point where, and this was indicative for me at least, how lucrative the consulting business is.
Really?
Deloitte actively tried to fire us as a client on the audit side. And we were paying a couple
Wow.
$1 million a year for the audit.
Yep.
They were willing to forego that revenue so they could go deeper on the
Yep.
consulting.
Is it
That tells you
that's-
everything you need to know.
That's really clarifying because it's this idea of the big four again. If it makes you sleep better at night to have other smart MBAs from Harvard and Stanford and Yale and Chicago and all the Ivy Leagues, etc. Good, and know that their business model isn't to solve your problem; it's to pull a little bit longer, a little bit. It's a billable event machine, is what they're trying to do, which is what your example really pushes out. Like, hey, well, if I can't do a bunch more consulting, I don't want to be limited here. I want
Right.
want open carte blanche. Let me go do what I think.
And they were actually trying to sell us on, hey, your whole revenue model's fucked. We want to completely do your revenue model for you.
I'm going to take a stab at this, Josh. None of it was contingent. None of their pay.
That
was
one they were willing to go contingent on that. They wanted to take.
So they were serious.
They were going to take a percentage of the dollars that they were able to
The upside?
to drive the upside.
There might have been something.
But they couldn't do it when they were the audit partner. And so,
So we never heard from them again.
yeah. And actually, I think this happened after I left. I think they fired Deloitte on the audit side, fired him on the consulting side, and then I think they're now with E&Y for the audit. But so they ended up kicking Deloitte out completely. But
that's pretty that's the other part you don't or at least you underappreciate. And then you're like, well, of course, they just want the billable. They don't have any contingency around success. Like, here's a great plan. Go get it. Well, I want a plan, and the operative word here is I want a working plan, one that's implemented and successful. And you did a third of what that all requires,
right,
but charged me for twice as what?
For twice as much. Yeah, exactly right. Well, so I saw. We'll see if you can guess this. I saw a statistic on what the average McKinsey partner bills on an hourly rate. What would you guess that is?
$500 an hour.
$1,200.
$1,200.
That's as the average, yeah. Now, and we've mentioned this a few times in other conversations I've had around consulting with people. The billable hour is always the kind of the center point of the conversation. What I found interesting as I was researching for the show is 2 years ago, so we're in 2026, so 2024, only 8% of consultants used the billable hour as like their driving metric. Then it went down to 4% in 2025. So when I saw that, like, there's no way that can be true. We all talk about billable hours. What most consulting has moved to now is a fixed fee. Now, behind the scenes, they're figuring out how many hours they think they're going to put into it and calculating it based off their billable rate and getting to it. But
probably still profitable.
Well, likely, because if they're gonna guess wrong on one side of the hours, they're gonna guess high. So my guess is it's even more profitable now under a fixed fee arrangement than it ever was under a billable arrangement.
Do you think that they drove that, or the client base probably drove that, huh?
What I saw, most of the alternative revenue model is how they phrase it. Most of the alternative revenue models were driven by client request.
That would make sense.
So be careful what you ask for, because they are no dummies. If they're going to get pushed into a fixed fee arrangement, they're going to make sure that they're getting their money back out of it. So I found that interesting.
That is that's on brand, though. And again, I do think there's some good, honorable people that work at some of these companies, to be clear. I just always counterbalance that with, what do you get out of it? And again, if you are thinking about, what am I actually getting that I wouldn't have gotten someplace else? So I read, I believe it's Bain. Sorry, it took me a second. Bain's consulting group says that 30% of their work and thinking is being done by AI right now. That interview was in 2026. 30% of what they're doing is through AI models. I don't think it's off the shelf like Claude or something, but it might be. I don't know. And they're still charging the same, or they're charging a flat fee, or all those things. Boy, oh boy, does that hurt them? Would it give you more of a pause, or like, no, lean into AI? Because
I've not put a lot of thought to that. Part of me wonders why the hell, if you're Bain or any of these outfits, why would you ever admit that? Why would you ever admit that you're using AI at all?
Oh, I think I know why they're doing it.
Let alone to what degree you are.
I think as smarty pants as they think they are, and everybody else thinks they are, I think everybody, like, AI is smarter than you. So if you're not using it, you better come out publicly and say something that you're using it.
Yeah,
that would be my guess.
Because
if you're like, no, we're smarter than that. We're not using any AI modeling or.
But then you almost have to say that you've developed your own proprietary tool.
That didn't get into it, but yes, I would.
You would almost have to, right? Like, it's because why would I pay you $1,200 an hour to go use Claude when I could just pay $100 a month to do it myself?
They're going to launch the Bain bot.
Bain, that's my right. That's probably a little too cute to be real, but maybe not.
Maybe not. Yeah.
And there's something like that out there. They may not have it branded as BaneBot, but
Not yet.
but
It's free for them.
I guarantee you they got something proprietary that they're trying to brand. And so does Deloitte, and so does KPMG, and so does McKinsey.
So I read, kind of staying in the same vein, how AI is affecting sort of these guys. McKinsey's headcount is down 10% globally in 2025.
Who's McKinsey's?
McKinsey's is down
10%.
Mm-hmm. And again, we're going back to Bain now. Bain says AI will be, or any AI implementations, either strategy, implementation, all the work downstream, should make up 40% of the revenues by the end of this year, 2026. So it was probably less than 10% a year or two ago. Now it's going to be 40. Jeez, that's going to keep climbing. It's going to be its own category in a minute.
So what is a Harvard MBA to do if McKinsey and Bain aren't hiring?
Well, the world needs ditch diggers too, I suppose.
I mean, what do you do after a Harvard MBA, if not?
Well, so I think boards, smart founders, tech savvy sort of startup folks, or even I mean, let's be honest, the people that are using it, there's the Fortune 500. They're the super big, very fast growing people that can afford this sort of stuff. Most people can't. And if you're,
We'll talk about law firms quick.
yeah,
Because, I mean, think of that. We've talked about consultants, but professional services at large, I would probably, I don't know this for a fact, but I would imagine the world spends more money on legal fees than consulting fees.
ooh, yeah,
We
overall.
should look that statistic up. That's got to be out there somewhere. But
Because if you're a smaller company, you're still going to spend hundreds of thousands of dollars. Even if you're $1 million company, maybe.
right, depends on what happens. But yeah, you might be with
legal would
fees.
be.
So I found some interesting things on legal too. Over 80% of legal is now going to some kind of non-billable rate. Like there's some kind of like fixed fee type
Like
rate.
retainer, like retainer plus or something.
Yeah, I mean, it didn't go into details on what it was, but that I found that fascinating. And I don't know if this is just the public optics or if this is true, but it would appear AI is encroaching on the legal world
Yeah.
more and faster than it is in the consulting world.
So this is what gets me excited about this day and age. You got the big four, the other big consulting firms that are out there, where they did have proprietary knowledge on some things and had access to other deals and industry leaders, et cetera. So they did have some stuff you were not going to get access to unless you hired them. Just
Mhm.
weren't.
Mm-hmm.
Now that AI is coming in, bro, I just hired my big four consultant in Claude, in Gemini, and GPT. Super easy for me.
OpenAI.
Yeah, maybe we should say that, OpenAI. So I think that's great. And it levels the playing field. We've talked about in episodes past, AO1, the companies that rise from one or a focused few people using AI. They have their McKinsey in their pocket. They have it on their phone. Sort of. Do you buy into that statement? Are you a buy or sell on that statement?
Specifically for the smaller ones. Startups?
Mm-hmm.
Yes.
You're a buy.
For all the reasons you would do a consulting engagement as a board directive in a big company, those reasons don't apply in a smaller company. One, you can't really afford the cost of it just on a cash basis. And two, you don't need the cover, you don't need the insurance, you don't need all the other stuff that comes with it in a large company. So it's completely not worth it. Now, you still need expertise and advice from people that have seen it and done it before. And yeah, it's...
So you and I have been involved in companies, not Fortune 500 companies, but they were, we were very respectable in size. And we had advisors. Occasionally we had consultants on very specific narrow things like around compliance or regulation. We brought experts in out of that. But for the most part, we dug into our personal networks, or maybe just a slight extension outside of that, where we looked at legal advice specifically, financial advice, tech advice, or most of the things we've done together, we looked for subject matter experts Who do we know in this space that's done this? Who knows about this product? Who knows about this approach? And we wouldn't pay them $1,200 an hour. We might say like, hey, since I know, like, and trust you, come on onto the cap table for 1%. I'm making up numbers now, but that wasn't
half a percent. Quarter,
half. Yeah,
whatever.
you're always more stingy than I am. I'm always like, let's give it to them. Those sort of advisors are your McKinsey. They are your KPMG, or again, make it up.
Mm-hmm.
Those are the people, if you're a small startup, or even if you're 10, 20, 50 million in revenue, don't be thinking you should hire these guys. You likely have people in your network that's going to get you better, more personalized work, thoughtfulness than anybody else. So everybody, and now with AI, good Lord, if you empower all your advisors with AI and you're working with AI, that's the support you'd need.
I saw a couple different numbers on this, but the range, and these were directly from like McKinsey and Bain. I saw numbers of somewhere between 70 to 90% of the business transformations that they're involved with clients fail.
We must have read the same thing. I read that too.
Is it your experience that in smaller organizations where you're leaning on people that you already know, like, and trust, there's a higher success rate?
Anecdotally, yes.
Yeah.
Yes, absolutely. Because how many?
I don't know if there'd be a study out there to show that, but
I don't
just intuitively that would have to be true.
But this is why, close circuit to all the early stage founders out there. Find somebody who looks a lot like you and has exited. Grab that founder. He or she likely is going to be so valuable to you. Like, I think about my early stage companies. We brought in our previous guest, Brian Kippers.
Mm-hmm.
Brian Kippers went through selling of his company, recapitalization. He did so many different steps. And so as a company that was not a $1 billion company, I mean, eventually got to like 200 million, which is nothing to laugh at. But he was so influential in just sort of sizing things up, what to worry about, what not to worry about. So you don't need all that stuff. What I would suggest is get somebody who's been there, done that. And so for those find somebody in your market. They don't have to be where you live, but it's generally useful.
Mm-hmm.
Find somebody else to say, hey, listen, I need you to be an advisor. Walk me through the path that I want to go on. And by the way, you were just on this path, or the path really close to it. I think that's invaluable to have. And I wouldn't, you could have 2, 3, 4 of those people around you. That's not going to hurt you. You don't need 10. But if you had 2 or 3, you're set. I think that's really solid advice.
You always give them equity?
I think that depends. What are you asking of them? Just going to run an idea by them, one time and that's it? I mean, that's then no.
Buy them breakfast.
Buy them breakfast, or, return the favor somehow and get them introduced to somebody else that's important to them. If they're going to sit up on your board, be an advisor to the board or board member, then it's maybe equity, or maybe if you've got cash, maybe I'd hold my equity and pay a small sort of advisory role fee.
Mm-hmm.
It's not going to look anything like the big 4, your smaller company, et cetera. They're probably going to work less than 2 to 3 hours a week on your stuff. So you're not going to need to do that. I would rather have them available. And again, if you don't know what you're doing, get the hell out of the business, first thing. But if you're looking for subject matter expertise, that likely should reside in your company, your senior management. But others just outside of that, adjacent to what you're doing, that's the perspective you want. Who might buy you? Who are you going to sell to? What's your new product line? Where's that go? Those are the sort of subject matter experts you want around you. So I would lean all the way in on that stuff.
To what extent do you try to have your board function in these ways?
Yeah, I think early stage companies, advisors, board, they're a lot the same. Obviously, the board has a fiduciary responsibility. The advisor doesn't, but they are going to act for it. You should have, again, if you're sub $20 million, your board should be active with you. Even though I know somebody might have wrote a big check to be a part of your thing. Hey man, that check you wrote actually comes with homework. You gotta jump in on this thing. I need you to help think through things. Get on a phone call with me. Talk about the next raise. Talk about client acquisition, whatever that is. Open up your network is probably what that likely looks like.
Mm-hmm.
So I think both board and advisory people can work slightly differently. And I would,
Because I'm just thinking of how, both of us actually show up in our board roles that we're on, and we're not in any way managing the company. And at the same time, we're pretty involved
deep,
with
yeah.
the management team and consulting with them, advising them.
Yep.
And I'd like to believe that that's helpful.
Hey, thanks for all the help, Josh.
Yeah.
We've actually pivoted.
I continue to be asked those questions. I'd
Yeah.
have to believe we're giving somewhat type of valuable input.
I don't know how you, again, early stage founders, you will die without those extra board advisors,
Mm-hmm.
board members that aren't bought into what you're doing. I know you think you can do it alone. You cannot.
Mm-hmm.
Isn't this a slogan? Like, was it Obama? No. Hillary Clinton, here we go. We'll take it in the ditch. Stronger together, right? I believe in that theory for small startups. You're not going to know everything. You're not going to be prepared for every situation.
Takes a village.
Takes a village. I think you need to do that. And I think that applies here really, really well. Again, do you want 15 advisors? No, that's silly. If I'd be okay up to 4 or 5, no more than that, because then you've got too many cooks in the kitchen.
Yeah.
But it does help to get other perspective.
Even with 4 or 5, you run the risk of getting some conflicting input.
Yeah.
And then it's a matter of, then you almost have a worse problem in trying to figure out,
Right.
what do I
Jimmy
do?
says go left. They're saying go right. What do I do?
Mm-hmm.
And I think it's
Hire Deloitte to come in and run cover for you.
No contingency. But I want to go back to the thing you said before, which is, what does everybody really know? Nobody fucking knows what's going to happen in business the next day, the next week, the next year. The fact that the big boys have a 70 to 90% fail rate on their biggest, most in-depth projects tells you something. I want to share a story with you, Josh.
Oh, please, Mike.
We had a chance that we were bought out by a multi-billion-dollar company. This is a different company, large insurer out of Minnesota. And we were just an shuck startup, right? We, 100 people, maybe 20 million in revenue, maybe a bit more. And we're like, look at us. Got $1 billion. And we're like, oh my God, they must know so much about healthcare. Kind of like people look to like McKinsey or Bain or somebody.
Yeah.
They must have all the answers. They must know everything. And it goes like, what the hell do I know? Let's just find out. So they make an investment. They eventually buy the company, but we're looking at this payer. I'm like, okay, tell us now all the secrets you know. What's the thing we're not getting? And it was crickets on the other end. Like, well, what do you mean? Like, well, what's the big miss here? Oh no, we like everything you're doing. I mean, just keep going. Like, oh, you don't know a damn thing more than I do. You think, because you're told like how big and how smart they are, kind of like these consulting firms.
Yeah.
You said it earlier. They're not the industry expert. They know how to polish and shine and dance and make you think there's lots of stuff happening. End of the day, you and your board and your advisors that you started with likely know more than anybody else. Likely. Don't fall for the what would that be, imposter syndrome? I think you're not good enough, or you're don't fall for that. You are enough, Josh. You as a person, as a professional.
And gosh darn it, people like me.
Yep. I don't care what your wife says. I think you're great.
My wife thinks I'm amazing. She loves me.
Mark the tape on that? No, actually, she might. Actually, my wife thinks, well, let's talk about your family friend. No, Sarah loves me.
One thing I thought of when you were walking through that is there is value, and I've seen this work a few times. I actually had a relationship like this with a partner at a big consulting firm, and that was not the expert. To your point, I knew probably more on the subject matter than he did or his team did collectively. Where he was really helpful, though, was just asking me questions. Hey, how have you thought about this? Have you thought through that? And just getting me to react to those and talk myself
I agree.
through the problem.
It's not $1,200 an hour beneficial, but it's beneficial, right?
Well, who knows, right? It might be.
You're right.
It could be, depending on the role you're in, the company you're in. But I think that's probably a bigger point on some of these really large consulting firms. Like, so for McKinsey, for a senior partner that charges $1,200 an hour, you're paying for their time. I mean, that's the trade-off, right?
Yep.
And if you are on a billable model like that, they are inclined to give you as much time as you will take. And so you do need to be careful about that, especially if you're in one of those relationships where it's like, oh, it's just so great to talk with someone that gets me and, helps me explore what I
Jimmy
need
loves
to.
me so much. He's like my brother I never had.
Yeah. So you do need to be careful about that because you're not paying for results at that point. You're paying for their time. And the moral hazard for them is to give you as much as you'll take.
No, I
I mean,
like
if you
what
paid me $1,200 an hour, Mike, you could have,
paid best friend right now.
yeah,
Hey, buddy.
how much time you need.
Chat you all the way back because you're driving back to the cities.
I'm going to ride with you.
$1,200 an hour. I'd do that. Fly private back.
Need money ahead.
So let me partner with you on this idea. Build on it because I do think you're right. Talking through, a lot of people like, I just want results. Give me the results. And I think results come from a really clear determination of I'm going in one direction. That's the right direction. So you're talking about the upstream before you take action. All the smart thinking and the reflection and the, would you consider this? Did you do that?
Mm-hmm.
That is really helpful for founders often,
Mm-hmm.
or anybody, any CEO, any senior executive, to have somebody sort of do the mental gymnastics with you about what if, let's half this, double that. And then once you've,
I don't know if I'd pay people for that though, as a founder, like an early stage company.
that's what your advisors and board members are for, sort of. And that's not like in a board meeting. That's like a, let's go grab breakfast.
Mm-hmm.
Let's go to the happy hour. And you kick through that. I do think that helps CEOs when they're surrounded by people who pull that out of them. If you're just and that's not an echo chamber, but if you're just sitting by yourself thinking through that, only talking to your management team, if you're the CEO or senior level, you're only talking to people who've got an answer to you.
Mm-hmm.
That may not be the best place to do that. You got to get outside of that. So there is real value in that. I agree with you, real value. And you got to limit the shit out of that scope. Being my paid best friend to bring something out of it. What would you say? Let's keep it focused on us little guys. I know you're a big deal, clearly,
That's what people tell me.
all the time. When I'm looking for advice and I kind of need some bigger thinking, bigger picture thinking,
Mm-hmm.
not really getting it, and you may not want to seek it from your team internally. Board's kind of like more just financial douchies, like, hey, here's a check, but I need to sit on the board to protect my thing. How would you advise startup CEOs to get that big four advice? How do they, and that could be leveraging AI, that could be leveraging your, how would they get that? Because every CEO needs that. If you want to be successful, or at least bring your odds up of being successful, you've got to have somebody other than you thinking about it.
Well, early on, and you can do this for as long as it makes sense, but definitely early on, go to your network. You ought to have at least a handful of people in your broader network that want to see you be successful and are willing to give you some amount of time without any cash compensation. To your point earlier, there may be hey, could you also introduce me to so-and-so in your network? 'Cause I think that'd be really helpful for me. And, I'm happy to have breakfast with you. There may be those types of trade-offs. And early on, I would say, don't exchange monetary value for that advice. You should have enough people in your network that want to help you for quote free for a couple hours here. You think, right? So start there. And then it can grow from there. It may grow. You may get introduced. They may help you work through a problem and then say, hey, Mike, you know who you really need to talk to is this person over here.
Jimmy,
I'll make the intro.
Yep.
And then that may become something that turns into an equity stake to be a part of the board or be an advisor group. So there's a lot of ways that it can grow, but I would say early on, just start with your network and see what you can get for free.
How would
Do you disagree with that?
No.
Oh.
I'm right with you. I want to.
You gave me a weird look, and I was like,
No, because I was because I
why
want.
is that a bad idea? You know, fuck
It's
you.
fucking
Fuck
brilliant,
you.
Josh.
Fuck you.
It's so good. Oh my god, I'm in the same room with you. Here's where I
You're
was,
so lucky.
I just have access.
Do
to
you wake up every morning and just praise the good Lord for having me in your life?
Yes, I drop to my knees every morning.
Mm-hmm. Father, Son.
Good Lord, baby Jesus. So glad Josh is here in my life, in my heart.
What's that from? Talladega Nights?
Yes.
Yeah. Sweet 8-pound baby Jesus.
Yes. I think where I was going was this.
I don't know where you were going with that.
But the reason I gave you the look was like, okay, how do you? So I like everything you said. Now layer in,
Except for
no.
Oh,
now
okay.
layer in AI with this. Like you tease me because I send you maybe once, maybe twice a day, something I found online and searched and built, completely polished PDF and gave you just dropped amazing knowledge to you.
Mm-hmm.
Would you sort of giggle at and say, go back to work with get off?
Yeah, get off Claude.
And I know that there's good stuff, and I know you do too. You mostly
use
just
it all
want
the
to
time.
tease me.
Mm-hmm.
But think of all that advisory thing we just talked about, big, little company. Where does AI play a role in that? I've got an answer, but I want to hear yours first around where does that layer into strategic,
Kind of as
tactical?
a functioning as an advisor.
Yes.
It's definitely a tool you should be using, and be cautious of what it's telling you. It's not infallible. It's another data point, and it shouldn't be your only data point. And so if you're going to have 3, 4, 5 kind of channels of advisors, that certainly should be one of them.
Yeah.
And know that it's a voice. You need to balance that against what other people are telling you with real life experience.
I agree with that take. I think AI stack is in that strategic flow of where you want to go.
Mm-hmm.
It will hallucinate. It will tell you better, and you will give it shitty inputs too.
Yeah.
You're going to be imperfect. So I think it's a part of it. What I like most about AI is it can make any sort of search or research done so if you're smart, you know, your business, you can ask it really good questions around research. Tell me about the growth in this sector. I want to get into graphic t-shirts because that's my jam. What's the growth look like? What are the arm me to make this decision? How would you do it? Like if you could give it a really good prompt, it can do that work. Again, it's one opinion because depending on how your settings are, they're either there to massage your shoulders and pump you up or, slap you across the face and tell you you're a moron. None of those are helpful, but that research functionality, even thinking through what's happening most currently and then statistical data and not have to rely on Jimmy, the loan shark expert from New Jersey who knows, hey, the points are run right now, 10 points a day.
Yeah.
No.
Well, where I've seen AI work, it delivers the best results is, to your point of a prompt, if you say, I'm in XYZ business, what do I do next? It's going to do its work and come back with, okay, go on this plan. And it may sound absolutely insane because there's just not a lot of context that was given to it. But if you start with the prompt of, hey, I'm in this industry, here's my challenge, here's what I'm going to do about it, or here's what I think I need to do about it, poke holes in it, that typically will give you a much better set of results from AI.
Yeah, I would agree with that.
Instead of say, hey, blank sheet of paper, tell me what to do next, versus this is what I think I should do, tell me where I'm wrong.
Agree.
You'll get a lot better.
So I think even for the biggest boys to the smallest kids out there starting their own thing, I want to paraphrase for the two of us.
Please. Synthesize.
Don't spend $1,200 an hour on KPMG. Get GPT for $20 a month. I think that's what we've said.
Yeah.
And some of your...
We should really get OpenAI to sponsor this.
We should. OpenAI?
Sammy
Davis Jr.? Who's Sammy?
Sam Altman.
Sammy?
Sammy A.
You just said Sam. Yeah, right. Yeah. Yeah, Sammy, come sponsor us. Anthropic? Who's the Anthropic guy? I can't think of his name.
I think
Claude?
he's in Guantanamo now.
Fair. I mean, obviously, we're open to any sponsorships right now.
Yeah.
Does the check clear? We're going for Billy's Taco Hut. If that
Dot AI.
The dot AI. Yep, we'll do it. Sure. Oh, your check's clear. Okay, great. Enjoy your tacos. But I think that's what we're saying. That's the. I think that's the synthesis of all this banter. Is don't hire consultants. Just use your AI. I know I'm simplifying that. And use your network. And you're smarter than you think you are. Those other people, they don't know what they're talking about either.
I think that's a great
That's
close.
right there.
Yeah.
Lawyers, guns, and money.
Yeah.
That's it for this round of burn rate and bullshit.
Where the only thing we sugarcoat is our coffee.
And if you like what you heard, great. And if you didn't, even better. We're not here to make friends. Hit like and subscribe. Send this to whoever needs to hear it.
And remember, hype dies, execution wins. Stop pitching, start shipping. Next time on Burn Rate and Bullshit, we're getting into the thing nobody prepares you for. What actually happens after the exit?
The why you're hitting your account isn't the end of the story. It's the beginning of a completely different one.
Capital deployment, the identity crisis nobody warned you about, and why so many people who sold for life-changing money end up starting something new within 2 years.
I'm a desperate man. Send lawyers, guns, and money. The shit has hit the fan.